Let me be honest with you, one of the worst feelings that can ever happen in P2P trading is buying USDT at a certain price and suddenly the market drops very badly. You open your application and then discover that the current market price is lower than what you bought it at. Immediately, fear starts entering your mind. This can cause you to ask yourself funny questions like, what if I lose all my money? What if the market keeps on dropping? Or should I sell all my USDT? This is exactly where many beginners make emotional decisions that damage their capital. In this video, I want to talk to you like a real person, not just as someone who is teaching P2P trading. Because if you stay in this business long enough, you understand that market drops will always happen and nobody can escape it. So the difference is how you respond to it. Because when I first started understanding how the market moves, I realized something very important. The moment you panic, you stop thinking clearly, because this will cause you to start making decisions based on fear instead of strategy. Now, do not get me wrong. I'm not trying to say that every drop in the market should be ignored. What I'm trying to say is that smart traders don't react emotionally to every movement in the market. They prepare themselves for volatility before it even happens. One of the worst mistakes that most beginners make is to use all their capital at once, and when the market drops, they become trapped because they have no flexibility left, no room to adjust, and no backup plans. So that pressure alone can push people into panic selling. This is one of the reasons why experienced traders manage their capital carefully. Sometimes they keep parts of their funds aside instead of entering the market immediately with everything. With that approach, if the market should shift, they will have options. Another thing is to understand that the market moves in circles, because there are days that the price of USDT goes up aggressively in the market, and also there are days that the price of USDT pulls back aggressively as well. So if you don't understand this, every drop in the market will feel like a very big disaster to you. But experienced traders understand that movement is part of the game in the market. Now let's talk about another thing, which is your mindset. If every drop in the market makes you react emotionally, that means P2P trading will drain you mentally, because all you need is calmness, patience, and discipline. Sometimes the best decision is not reacting immediately. In situations like this, all you need to do for yourself is to give yourself 2 to 3 steps backward and then watch the market very carefully before you can now think of entering the market again. And let me say this very clearly. There's a difference between controlled decision making and blind hope. Smart traders don't just hold forever with the mindset that things will magically recover. So what smart traders do is they study the market, they manage their risks, and they also make adjustments based on the market reality. And that's the big difference. Another thing that helps is avoiding greed. The reason why I'm saying this is because a lot of people enter trade with the mindset of making massive profits immediately. But when your expectations are unrealistic, that's where fear will become stronger whenever there is a market drop. That's the reason why consistency matters more than hype. This is the reason why you need to understand that small profits over time is far better and sustainable than emotional trading. So at the end of the day, survival matters. Because if you protect your capital, you're giving yourself another opportunity to trade tomorrow. But if you allow your emotions to destroy your capital today, recovery will become much harder. There is one thing that I will always want you to remember, which is this: a trader who can stay disciplined during difficult moments is already ahead of many people, because emotional control is also part of the skills. So if the market drops, all you need to do is to slow down and think clearly. And trust me, this will help you protect your capital. So it is advisable for you to condition your mind for long-term consistency instead of short-term panic. So in my next video, I'm going to share with you how experienced traders identify opportunities in the market before entering a trade in order to reduce their trading risks.